It is March the 7th, 2016. Michael Vaughn with Brian Acker, March 7th, but I want you to think about March 9th and tell me what that means to you.
March 9th of 2009.
Ooh.
7 years ago.
Yeah.
Think about that.
It seems like yesterday.
Financial crisis.
Yep.
The market, the S&P 500, bottomed at 666.
Amazing.
And I'll remember that number for the rest of my life. And so we look at our fund, our U.S. fund, our U.S. Value 50 fund. Over the last 7 years this is ending on Friday.
Because it's tickling 2,000 again, the S&P.
Absolutely. So we're up, 320%. And the S&P's 250%. So,
I'm glad I had the nerve to stay invested.
You know, we've been complimenting our clients. What people don't realize when they look at compound rates of return, if they didn't have the return of 2009 and 10,
Yep. If you come in too late, you're sunk.
Your rates of return would look so much different than what they are now.
Right.
But again, it was the decision of every client basically to stay the course. And it was hard. It was very, very difficult. It was very, very painful. And nearly all our clients did. There might be one or two that didn't. But I'll tell you, the money you have today was predicated on that decision and keeping with that decision. So.
Well, this year started off, January was horrible, and I did notice that you've gone to a bigger cash position than I've seen you in for a long, long time.
Absolutely. Two big issues. So we're talking 2016. Starting the first part of January was the world actually thought the Chinese yuan would devalue.
Yes.
And I made a comment probably about at that time. I studied China. I did nothing but study China for 3 or 4 months, and I came to the conclusion they weren't going to devalue, and of course so far they haven't.
They play the long game.
Extremely long game. 2049, you hear all the time, that is the 100-year anniversary that they went communist.
Yes.
So anything they do today, they think about in 2049, which is amazing to me. The second big issue the market was dealing with was the Federal Reserve. They hiked rates in December. Right after they hiked rates, the economy slowed right down.
Yeah. Oh, they made the wrong call. Oh, panic, panic.
So again, what we see here, certainly today and Friday, the cold hand of deflation has been lifted from these markets. Mm-hmm. So enjoy it. We're in this period now of relative calm. China looks like, it's not going to devalue. The Fed looked like it did the right thing.
Yep.
The markets are rallying, especially in Canada, if you will, when you look at the crap that's out there. All the stocks that fell, certainly below 10, certainly below $5 a share, certainly are picking up, and those are the stocks here that are flying.
So are you ready to put that cash back in the market, or are you staying in a high cash position?
Well, keep in mind, we had a high cash position in January, but certainly over the February, etc., we were putting that cash to work. So
I see.
We're still behind in our benchmarks. U.S. is close. Canada, we're probably about 4 percentage points behind. But again, the year's not over.
No.
And as you know, there's a whole menu of issues, potential issues. You got the U.S. election, you got the Brexit coming up in June. It seems like there's so many issues. So enjoy these days where basically everything is lifting like helium. And the world seems to be at peace.
But you're still playing defense.
Yeah, as far as we're concerned, in Canada, we're still in a bear market.
Yeah.
Yes, we're trading nicely here. We're not going to chase anything, obviously. We're still looking for value in this market. And look, this could go on for another month or so,
sure,
which is fine. The issue then is, taking the gains that we had. We invested in a few of these, called them, high torque stocks. We'll take our gains here, then we'll look for other opportunities once this market rolls over.
Well, I'm feeling better about March than I did about January, and
Oh, you should.
I hope we're feeling as good in April. Thanks for your time, Brian. See you next month.
Michael, it's always a pleasure to see you. Thank you.